What is going on, investors? And boy, oh boy, what a crazy week this week was. And even towards the end of market close on Friday, we saw a massive sell-off. I mean, big tech got hit, finance got hit, communicated sectors got hit, cyclicals got hit. The only thing that really had a good day on Friday was healthcare. And if you look at the sectors from a market cap point of view, everything was getting sold off. Now, a common trend we've seen has been mid caps and small caps getting absolutely obliterated over the past 5 months. But over the past week, you can see here, mega caps are starting to slow down in terms of the buying pressure, and there's a lot more selling pressure being introduced. And on the one-day relative performance, mega caps also got sold off quite significantly. Now, with all of this blood on the streets, of course, you know me on this channel by now, I am going to be buying. So I have been buying, and I started a brand new position this week, and I'm going to be sharing with you today. But I also did make a sale this week. So I made a sale. I sold a company where a merger fell through, and it meant I did lose some money. So I did sell at a loss because the merger failed. Also, I'll be bringing that to your attention. Plus, I did do some nibbling on some of our favorite stocks on this channel. So I'll be telling you what stocks they were. However, if you want to know what I'm doing in real time, then you need to check out my Discord group, and the Patreon link is in the description below. But before we get into all of that, why is your boy dressed up looking fly? So one of my very good friends and also a Discord member, Gary, is getting married today. So massive congratulations to Gary and his missus. I'm going to be there. So that explains why I'm dressed up right now. I'm not celebrating the carnage on the street, even though if it does get a bit red, I might start dressing like this during red days. But that aside, let's get into the first stock I bought. So this is a brand new position for me. I started buying ASOS this week. Ticker symbol is ASOS. And I want to give a shout out to Yassine and a few Discord members as well. They alerted me to this massive pullback on ASOS. And if you're not familiar with ASOS, they're an online fashion retailer. They own subsidiaries like Topman, Topshop, and many other top online retailer names. They're one of Boohoo's biggest competitors, and they have expanded internationally, so they are doing very well. But the stock did take a stumble this week. And on Wednesday, the 14th of July, you can see it pretty much fell off a cliff, dropping over 16% by the end of the week. And over the 5-day period, the stock was down 19.76%. So almost a 20% pullback. Now, of course, the market in general suffered a massive pullback this week, but more so ASOS. And that was down to a good reason. Okay, so the company recently submitted a trading statement, and it was to do with their performance over the last 4 months ended the 30th of June 2020. And you can see from this statement here, they kind of gave us a poo sandwich. Now, if you're not familiar with what a poo sandwich is, so if you picture a sandwich, you've got the bun, right? Then you've got the middle part, which is the filling. Then you have another bun at the base, and that's pretty much your sandwich. So the bun, you can say, are the positives, and the fillers in the middle, you can say, is the poo, the crap, essentially. So they pretty much gave us a poo sandwich on the 15th of June. They said that the revenue growth over that 4-month period was very strong, which was against a backdrop of continued restrictions on consumers, volatile demand, and also increased global supply chain pressures. Okay, so again, there's no secret that there's been a lot of supply chain pressures, not just within the fashion industry, but also within the food and beverage industry. I know Celsius currently are struggling with aluminium cans. There's a global supply shortage of aluminium cans. So this is something that I'm familiar with, and it's hitting ASOS as well, okay? But they've said amidst that, amongst all of those additional pressures, they still saw revenue growth, okay? So that was a good part. So that was the top layer bun. Now, this is what investors didn't like. So they said trading in the last 3 weeks of the period was more muted as continued C-Roni uncertainty and inclement weather, particularly in the UK, impacted market demand. So they're pretty much saying that due to C-Roni uncertainty, and again, that's to do with the UK government flip-flopping around on their lockdown policies, and also inclement weather, they're forecasting a potential slowdown in demand, okay? So we anticipate a measure of volatility to continue in the near term, given the rapidly evolving C-Roni situation worldwide, okay? As a result, we expect our underlying P4 growth rates to be broadly in line with the prior year comparable period, okay? So this isn't great news, okay? So this is the poo, this is the fillers, this is the poo in a sandwich. They're not forecasting continued growth. If anything, they're putting investors' expectations in line of the prior year period, which is not a good thing because it's pretty much indicating that you're going backwards. Investors want to see the company moving forward, not going back. So essentially, that was a negative, and I think that added additional selling pressure to the stock. But they finished off with a final part by saying the global opportunity for ASOS to grow in our targeted market is greater than ever. So this is the final part of the sandwich, the other bun, all right? So the positive. We are continuing to confidently invest across our our unique ASOS brands and our ASOS platform and our ASOS experience, powered by our ASOS's technology and global warehousing capabilities. So they ended it off on a positive note. But this right here was pretty much the damage. This was the damage done, and that was what investors didn't like. And then you saw the 16% plus sell-off mid-week. Now, I think this is an overreaction. Because if you look at the financial health for ASOS, they are in decent financial health. I mean, this is not the best balance sheet that I've seen or best balance sheet of any company that I own. But if you look at their long-term assets, they're sitting at 1.28 billion pounds versus long-term liabilities of 342 million pounds. Okay. But if you look at their short-term isn't great. Okay. So they're sitting on 901 million pounds worth of assets versus 914 million pounds worth of short-term liabilities. So their total current assets do not exceed their total current liabilities, which is not great. So that will have an impact on their current ratio. And again, in the short term, does slightly increase the risk of investing in this stock. Despite the uncertainty that was painted in the statement released by the company, they're still forecasted to grow at 14.5%. So these estimates are from 21 analysts, but it wouldn't be surprising to see more analysts now come out, especially following the statement from the company, and maybe reduce their projections going forward, because the company right now, they've been honest with investors and said, look, we can't really guide for continued growth, and they're pegging their growth to the prior year period. Now, despite this statement and potentially revised analysts' projections, you're seeing some analysts come out and say buy the dip. This is a great buy the dip opportunity, and the company itself are doing really well. They're to expand their Topshop presence in North America with Nordstrom partnership. So the company itself is doing really well. They're in an industry that is forecasted to continue to grow at 44.3%, and I think this near 20% decline in the stock in the past 5 days is a little bit of an overreaction. So I started a position in ASOS. I notified my Discord. I said, hey guys, I just picked up Taster shares, 15 shares in ASOS at £39.37 to keep on my radar as I begin studying this company. If you've read Richer, Wiser, Happier, then you'll be well aware of Nick Sleep and Q Zachariah, relatively unknown incredible investors who have thrashed the market since 2008, returning over 404%, and they concentrated their portfolio to just 4 high quality stocks. And that's Costco's, Amazon, Berkshire Hathaway, and ASOS. Adding to ASOS during the C-Roni crash, and ever since then had my interest. Okay, so this is the book Richer, Wiser, Happier. I've plugged this book many times on this channel. Definitely check it out if you haven't read it already. Fantastic book. I said here, if I like the look of the company, the management, and the rest, I could make this a large position in my growth portfolio. But for now, just a taster while I conduct my due diligence. Okay, and I updated here. I picked up an additional 15 more shares after checking the company's financials and seeing the stock is undervalued as per the DCF calculation conducted by Simply Wall Street. All right, and this is what I mean here. So on Simply Wall Street, they have the DCF calculations already inputted for the stock. According to their valuation metrics, the stock is 32.7% undervalued. The fair value, they have it at £58 and 57 pence. So that's my brand new acquisition. Again, it's still a starter position. I only have 30 shares, but if I continue to like what I see, I need to do a lot more research on the management and the leadership of this company. If I do like what I see, then I will make this a large position. Now, what stock did I nibble on? Celsius. Ticker symbol is CELH, and this stock absolutely obliterated multiple support levels. So using the Fibonacci retracement tool at $67.88, there was key support at that level. On that day alone, the stock was down over 10% on that day, and the selling absolutely continued, and it retested support at $63.19, and that support kind of held on the 15th of July, but on the 16th of July, on the Friday, it didn't hold, and it's now broken through it. So potentially, depending on how next week turns out, we could actually be on our way to the next support level at $58.51. But I saw this weakness here, an opportunity to nibble, and I decided to pick up 20 more shares, okay, at $65.56, and my new average is now $51.09. So if we do retest this level here, I'm going to pick up even more and continue to build my Celsius position. I'm very bullish on this company long term, and I think at these valuations right now, I think it represents a good buying opportunity long term. So I nibbled on Celsius, and last but not least, of course, I nibbled on Tattooed Chef. I just can't help myself with this stock. At a few moments this week, it traded below $20, and anything below $20, I can't resist that temptation. So I nibbled on a couple more shares with Tattooed Chef, and I got this and I got it here. So all nibbles here, picked up 30 more shares of Tattooed Chef at $19.73. But if you look at the stock itself, Tattooed Chef actually held up very, very well over the last 5 days. It's only down 2.3%. But if you zoom out to over a 6 months time frame, you can see there's been a lot of damage already done to the stock. It's down 90% over the past 6 months. Whereas the likes of Celsius, it was down 14.9% in just the past 5 days. So Tattooed Chef, although it had a bad week, it was down 2%. It was down 2.3% just this week alone. It represents a good buying opportunity. You guys already know how bullish I am with Tattooed Chef, so I'm not going to waste too much time on that. Now, what stock did I sell at a loss? I sold this SPAC, okay, Ace Convergence, okay. So they were meant to be merging with Acronics, okay, but they scrapped it. They scrapped the $2 billion merger, which was extremely annoying, an absolute waste of time. I invested in this company, I think back in January or February, so I did lose a bit of money, and I alerted my Discord here. I sold my small position in ACEV for a 12% loss due to the merger collapse with Acronics. ACEV now have just over 12 months to find a replacement company to merge with, but it's not good enough. Really disappointed with the management teams for failing to finalize this merger. Losses are part of the game, lessons learned, okay? And that's just pretty much how I took it. So I did lose 12% on this investment. It's annoying, but this is why SPACs have a bad rep right now. So I'm going to wrap this video up here. I need to start heading off to my boy's wedding. Thank you so much for watching. If you gain any value, please make sure you smash the like button. And if you're new to the channel, hit that subscribe button and the notification bell to stay up to date with all of my latest videos. But with that said, I appreciate your time. Thank you so much for watching, and I'll catch you in the next one. Peace.